Hey, what's up guys? John here. Elon Musk believes we're stepping into the greatest economic depression in human history. I'm not saying that to scare anyone. I'm not. But I am going to lay out the data and the information of what I think Elon Musk is basing all of his decisions on in this video. Before I dive into it, today's video is sponsored by GreatCreditFast.com. That's GreatCreditFast.com. I own this company. We're helping a lot of people fix their credit. We're also helping investors position themselves so they can get financing to buy their first real estate deal, potentially even get a business loan to get out of high interest credit card debt. We're helping people get ahead. Normally on an average day, we're helping remove at least 100 inquiries a day from people's credit report. Whether it be late payments, medical bills, bankruptcies, we're helping remove it all at GreatCreditFast.com. So the video, $3.6 billion, $3.6 billion he just sold of Tesla stock. Now what's pretty crazy to me is a lot of people say he's just doing this to, fund saving the world through Twitter. But the reality is, he's been the biggest net seller of stock over the last 12 months than any man on the face of the earth. You have to ask yourself, why? Why would he sell off all of his shares, or a lot of his shares, at the low? I mean, Tesla's trading at $150, $157 a share. 8 months ago, 9 months ago, 10 months ago, selling at $400 a share. Why would he sell it for this massive discount? Well, it's because I think that he believes it's going to go a hell of a lot lower. And I think a lot of the billionaires, a lot of the elite, they're thinking the same thing. Look at Mark Zuckerberg. He was selling shares every single day in 2021. Every single day. There wasn't a day that he missed where he didn't sell shares. That's something we all have to pay close attention to. We look at what's going on with the CEO of Microsoft. You look at Bill Gates, Bezos, all the rich, they were selling. They didn't take out a loan against it, which they could have. They could have taken out loans against their stock at a huge number, and they could have taken out 70%, 80% loan to value against their stock. It would have been a non-taxable event. They wouldn't have had to pay any tax on it. They could have held their shares and then took the cash. And then if the shares continued to appreciate, they got to enjoy that ride of appreciation plus holding the cash in which they could have invested. But they didn't do that. You know why? It's because they believe it's going to go a hell of a lot lower and problems are coming. But what I'm looking at that I think a lot of investors should be paying close attention to is just this simple formula. Right now in America, 330 million Americans, right? 48% of the US population works for a small business. It's not all the corporations, right? The corporations aren't employing the majority yet. 48%, so roughly half the population works for small business. In October, it was over 30% of US small businesses missed rent. In November, it was over 41%. Right, so you look at the trajectory, okay, everything's getting a little bit worse. We're not hearing about it yet in the media. We're hearing a little bit about, oh, they're gonna increase interest rates. What people don't realize is when you increase interest rates, it's not just gonna impact, mortgages, it's gonna impact credit card debt. It's gonna impact mortgages as well, of course. But credit cards, it's gonna impact auto loans, it's gonna impact personal loans, it's gonna impact all types of loans and servicing existing debt that's on adjustable rates. And these small businesses that are, 41% of which are unable to pay their landlord in full. These small businesses that have existing debt, you're going to see more and more and more of the other small businesses start to crater, right? This is what's going to start to happen. And this, to me, I look at this and I'm like, okay, well, if half the US population roughly works for small business and roughly, 40% of these small businesses can't pay their landlord, what are they going to do when we start stepping this change? And how much property do these people own? What do they own? How are they going to get out from underneath it? Because that's what people start to do. They start to think, okay, I'm in this debt. I can't pay my landlord. How can I, make good on these existing debts? They're going to start selling boats. They're going to start selling watches. They're going to start selling second cars, rental properties. They're going to start to sell and unload these assets to make ends meet. And I ask myself, okay, well, how many properties do these small business owners, these mom and pop investors own? They own 20.5 million housing units. 20.5 million housing units. To put that into context, the entire population of Florida, about 20 million, right? How many housing units are in Florida? 10 million. 10 million housing units. So it's two Floridas, essentially. Two Floridas owned exclusively by mom and pop landlords. My suggestion, my belief, is I think that we're going to start to see a lot of these entry-level properties start to hit the market and search for buyers. That's what I think is ultimately going to happen. So if you're a renter right now and you're like, okay, well, I'm getting hit with inflation. My landlord keeps jacking up my rent. I don't know what to do. This is the time to build out a framework and a strategy. What I would suggest doing is writing out on a piece of paper all of your monthly expenses, and then say, okay, well, my monthly expenses might be $3,000 or $3,500, and $2,000 of which is going towards my landlord. Well, maybe the plan would be to increase your credit, to put yourself in a position to where you can get access to financing, to go buy a triplex or a fourplex, to go buy one of these deals, live in one of the units, collect rent from the adjacent units, and then ultimately you'd be able to live potentially rent-free to where you could then, bring your monthly expenses only to $1,000 a month or $1,500 a month, allowing you to save more money. Because as the world starts to get more crazy, you're going to want to put yourself in that position to, navigate the storm a little bit better. Right now, Tesla obviously is getting killed. The Dow Jones is getting punished. But this is where it continues to get worse for small business. U.S. retail sales tumble in November as California's anti-inflation stimmies end. And Powell says Fed still has a ways to go after a half-point hike. U.S. consumer loan delinquency seen surging to a 13-year high in 2023. Credit card personal loan delinquencies expected to surge in 2023. And intensified housing market correction has home builders offering sweetheart deals to Wall Street. This is what's ultimately going to happen. When I say we're in this great wealth transfer, the rich, the wealthy, they know this. They're sitting on mountains of cash. They're positioning themselves because they know if you have half the U.S. population working for small business, and small business is getting really punished over the last couple of years, going to get much, much worse, you're going to see people no longer going to small business, unfortunately. I love small business. I love America. But you're going to, just the hard reality. People aren't going to have the money. They're going to have to shop, and they're going to continue to shop online and look for discounts. People are going to be doing that. It's very hard to get discounts at mom and pop stores because their costs are much higher. They're paying very expensive labor. For example, there's a sandwich shop near my office. I mean, just a normal sandwich, about 17 bucks, right? 17 bucks. Coffee that I'm drinking here, $7. Everything is so expensive for them, for the small businesses. Everything's so expensive for the small business that it's just going to get harder and harder and harder for these small businesses to make ends meet as the consumer starts to really, they don't have the options financially. They don't. They're going to be penny pinching. And so you just look at the information. Look at what happened in 2008, 2009, 2010 as the crash started unfolding. Incredible investing opportunities, but banks tightened up so much to where you needed incredible credit to even qualify because they didn't want to take on additional risk. If you look at what's going on right now, some banks right now are getting rid of their unsecured lending products. They're not lending out personal loans, business loans. They're only lending on assets. I think that trend's only going to continue as the economy just really begins to deteriorate and becomes much more visible. A lot of people think that, this is where it's going to end. I personally think that we haven't really yet started this problem, and I think that a lot of people can easily ignore what's going on in the markets, even right now, saying, you know what, it's not that bad, it's not that big of a deal. But wait until 2023, because right now, 1 in 6 American families can't pay their utilities. Wait until after the holidays, after people unload even more expense and debt on their credit cards. And as they continue to do this, next year they continue to jack up rates and continue to do it, it's just going to get more and more and more painful. I'm telling you, when we see intensified housing market correction has home builders offering sweetheart deals to Wall Street, you're going to start to see these sweetheart deals coming to Main Street. And if you have the plan, the money, the strategy, you have a really good, foundation, you're going to be able to run out there and I think pick up some great properties. But you do not want to put yourself in a position to where you see some life-changing opportunities, but you simply can't get financing or you're not positioned for it. It's not too late. I personally think that, it's going to take maybe 6 months, maybe 3 months. This is the time to start preparing to build out that plan and strategy. This is the time. If you need help fixing your credit, if your credit score is below 750, call us, 561-430-5900, greatcreditfast.com. Schedule a free consultation on the website if you'd like, or just call us today. But don't miss this opportunity. Look at Elon Musk, look at the smartest people in the world. They're all signaling the reality that we're stepping into problems. Even Bezos came up recently, and he said that this isn't the time to go buy the new refrigerator. This isn't the time. And what did he do? He started closing down call centers, halting construction projects. Why is he doing this? He's doing it because he knows that consumers are going to have less money and the world is going to go through a really, really big contraction. And he doesn't want to get stuck, with all these expenses that aren't going to generate income that really are worthwhile. What do you think? Drop it below, hit the like button, subscribe here, and subscribe to my second channel. It's interactive call-in show and a podcast. LinkedIn, Twitter, Instagram, and TikTok. It's up in the banner for short form content. And catch you guys in the next video.